pink line. We sold this one, got the trade on at the pink line, bought this one, got the trade on at the pink line, and so on and so on. And we just kept doing the trades. We just kept on actually manually doing the trades, and we ended up with a very, very big winning run. And we had a good sequence of events that took us to a conclusion. You can see where the max signal was coming in. You can see where I'm drawing the arrows. You can see where the trade was taken, where the orange box is, just so that we can see what you guys could have got trading, what you guys could have got filled on any one of those opportunities. And they all moved some pretty good money. We had 2 losers. If I remember correctly, by the time we switched off, we had 14 winners and 2 losers, so 12 points net. 12 points net for $600 on a $50 target, and most of them went on to do a few $100s, which was nice. Big market today, the biggest market of the big markets. We've had some pretty impressive opportunities to do some damage on oil. It's been absolutely stunning again today, and well, we talked about it this morning just before we got popped off on the so rudely by the fiber optic people, and we started to work on the oil on the supply side, and we had a very, very, very hot sell side opportunity. We'd kind of already talked to everybody about this, about the idea of the measure, the idea of the target price, the idea of this sell trade. So we'd already talked about that one. And then what happened, of course, was we then had the halfbacks coming into play on the way back up again, and we had this brilliant sequence, which resulted ultimately in this very, very, very nice target price, where you can see we get the measure, which is almost too good to be true considering yesterday's classroom. And you could just see what happened. I mean, it was just ridiculous considering the classroom we've just done yesterday in the Monday Club. The idea of just getting into that position at that point, at that time, was just so superb, because we had the pullback, we had the halfback sellers, we had the prop stops coming out to play at the first target price, and it just got ridiculous how accurate this was in terms of structure, in terms of process, and the amount of profit in this. It doesn't look like it's a big swing day today, because it just looks like it's a bracket, of course. And it just looks like it's a bracket, of course. But the bracket, guys, is 67.20 to 65.20. 67.20 to 65.20. It was a $2,000 sell-off, not including the 2 halfback sell trade opportunities. It was enormous considering everything else that went on the day before, and the day before that, and the day before that, and the day before that. I mean, this market is on fire just now. It's so ridiculously good. And obviously, when we were looking at the possibility of a guaranteed discount, we were trying to find a story to get behind the guaranteed discount. And obviously, what we're looking for is some sort of a dollar change around in here, which we were thinking about, we were watching. We were waiting for the buy side bounce on the dollar. We were looking for it on cable as well. We started to see the divergence against equities on cable, and that was a good storyline to get into cable. We can come to that in a second. But so there was a story to get into this against the dollar, and then buying back off the $65.10 was genius, absolutely genius. And it's taken us all the way back through to $66.90. It's nearly another $2,000 on the way up, 2,000 on the way down, 1,000 on the way up, first of all, 2,000 on the way down, 2,000 nearly on the way back up again. $7,000, $8,000, $9,000 per contract, because of the size, the physical enormity of the scaling that we're seeing just now in terms of volatility is ridiculous. It's knocked out the park here with everything that's going on. It's just plumb madness. Just madness. But it's madness in a good way. I must admit, I'd rather see that than not see it. The storyline behind the bonds is pretty good as well. So we've had some pretty good trade in that. Equities, yeah, it's all right. It's all right. It's been it's obviously came off the buy side, sell side levels from the cash open, and we've managed to find our way into some of those bits and pieces. So overall, I can't say that there's been anything really that difficult. I mean, the sell at the top edge of bonds was stupid. I mean, it was just ridiculously easy to sell off of the 203.25s on the ultras. I mean, it was shockingly easy. I mean, they never even challenged us on that damn trade. There was no effort whatsoever required to be short bonds for what ultimately turned out to be a trade that's just gone for over $2,000 per contract on the short treasury as well. So I'm assuming everybody made a fortune on bonds as well as the oil price this morning. So here's the bond trade. We'd made some good money on the earlier stages of the buy phases this morning, sold off the highs, and we got into a good position off the pullback at the halfback trade area here as well. And there was a very, very nice halfback trade opportunity that started to set up just inside this little bracket area here. And that was a very, very big profit. You're thinking that's probably it for the day. Oh, no, 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 no. It wasn't even close. So we can already recognize that the gilts have hardly made a move because of the way the dollar's been behaving. So that we know that the price is overbaked up here. But so we're just waiting for inflation break-evens to line up. Did they line up? Damn right they lined up. Look at that top edge, guys, and tell me what's happening up there. Look at that top edge. This is nuts, isn't it? This is absolutely unbelievable. So we started to see an opportunity, and I was like, okay, well, we might make another few $100s on this. We might make an extra little buck on this bit of business here. We might squeeze an extra trade out before the end of today, thinking it's going to do a few $100s or something like that, and then this happened. We got another retest. We started to see it moving. Thought this was it. Took a bit of profit out in this area here, but then we started to get moving again on the European bond market. Started to get a shifty on again on the sell side, and sure enough, it just kept dropping. So we went from a high print of 203.25s to a low print eventually down at 201s. 203.25. 201s. I mean, it's ridiculous. It's nearly $3,000 per contract. You can't make it up, guys. You can't make it up. Cable. Cable's been interesting, to say the least. We've obviously been watching cable in line with equities because, well, that's what we normally watch cable in line with equities, break-evens and stuff like that. And we had a couple of trades this morning of buying off the guaranteed discount price, got a good response, but we lost equities on the uptick into the stops. The price came back out again, and obviously the idea is that we should always try and figure out where the guaranteed discounts and premiums are located. So when we're starting to look for this, we already know where we should be looking, don't we? We should already be aware of where the most recent buy and seller is located. And we start marking off the areas. Anytime we get a sizable buy side bounce or whatever, we always do the same thing. We always do the measure because we're trying to figure this thing out. And we can see that if we just carry on with that measure process from this bounce here, where are they going to take profits? And it turns out to be roughly the same price, doesn't it? Look at what happens here. We start getting that confluence of people taking profits at the same area at the same time. Now, I needed to see that. I needed to see that from the oil perspective to get that buy trade back on board off the lower edges. So when we start coming down into this area here, we start looking around this for an opportunity, and we start asking the question, what is the equity price doing? And we can see that the equity price into that bottom edge started to diverge off the lows. It already diverged on a macro scale. So what we were trying to do was find that guarantee to add to our ideas. Now, we couldn't have bought here because the equities are selling. We couldn't have bought here. Equities are selling. We couldn't have bought here. Equities are selling. But we could have bought here. Equities have stopped selling. And we obviously can step into sterling behind that, and we can take a ride north side. And sure enough, that ride north side's done pretty good. We've came into the supply level with the toxic order flow just there. We've seen it as a nice area to take some profits, and we've taken some profits. And you can see exactly what we're doing. You can see exactly why we're doing it. It is pretty simple stuff. Now, when we link that to the storyline of the 10-year, you can see that's a little bit clearer to see that the bottom edge. You can see yields were diverging off the lows exactly the same time as equities were, so that's very obvious, very timely to get that yield reversal. And that just opened the door for that sterling sell, because again, yields dropping is not a sterling buy trade. So when the yields turn around and start going back up after that sell-off here, now's the time. We're in the right location. Everybody that has been short is now going to be knowing that these are the target price areas that they had been holding on to because the price of yields, price of equities have both been dropping. And then we execute. And when we execute, guess what happens? Straight into a very, very sizable profit. 35.70s, 36.20s, 50 pips. And that's all we can see. 50 pips, guys. It's a beautiful, beautiful bit of business. And the game's set in matches in our books, that's for sure. So it's been a very good session. We've got some, as I said, some business done on the spreads. We've got some business done on various other bits and pieces. It's a pity we got interrupted on the max buys and sells because it was on a blisteringly good run ahead of the US cash open, and you know, the same trouble we've had from the US cash open is we just lose a lot of the triggers because the quality tightens up a little bit. Welcome in, guys. I hope you're all good this morning, this afternoon. In terms of data this afternoon, we had mixed numbers coming out the US with building permits and housing starts, kind of mixed numbers. Building permits missed expectations, whereas housing starts actually beat expectations, and that's kind of finished the day off. But obviously, when you get big volatility in oil markets and equity markets, and it doesn't just go away, it sticks around for a while. I was quite keen to buy equities today at the open as well. Pretty obvious reasons, of course. Did you all see the puts and calls surge in last night's close? I'm assuming you did. And there should be no reason why we shouldn't be able to take advantage of those hedging positions. And that's exactly what we did, and to a huge profit, of course. And again, I don't think anybody can hide from the fact that we had the perfect storyline. Now, when we're looking at the big picture, of course, the question is, why were we buying yesterday? Remember, we took the buy trade on the Qs. You must all remember that because we spent a bit of time going through it and going over it and going over it and going over it. But remember, we took that trade and we says, look, here's the deal. This is what happens in the micro world that gives you that big spike that you're looking at. Remember, we've seen the big spike in the Qs? No? All right. Well, when we get a big spike in puts, the big spike in puts is what we covered yesterday for obviously nobody that was in yesterday that was listening. And that's going to show up on the puts calls ratio. It's the same thing. A big spike in puts. I thought everybody knew this, but obviously nobody does. But what you should be really trying to pay attention to is this. It was one of the highest reads we've ever had. It was one of the highest reads. We've had a higher read over here back in May. We had another high read here back in, the 19th of May. I thought everybody knew this. And then we had another massive read there on the 19th of July. To me, that's a buying opportunity. It always is a buying opportunity. It's just a walk in the bloody park. I keep telling you this trade over and 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 over again. So who all made fortunes off the equity open today? Who all made fortunes? Absolute tons and tons and tons of money off the equity open, knowing that this has been covered billions of times, millions of times, hundreds of thousands of times. I'm assuming everybody made a fortune off the cash open today. And it was pretty obvious and pretty easy, wasn't it? Pretty obvious and pretty easy. You can see that find that chart again. You remember from yesterday we were talking about the queues. It was on the queues, of course, that this trade took place, and it set off the bottom edge. It actually was the bottom edge when we saw the trade setting up, didn't it? It set up that bottom edge. We talked about it in classroom, the accumulation that came into that phase. And we can see what happened with the queues after we got that little half-back trade area. That's where the price traded back to, based on a simple basic structural process here of the top edge, the middle price, and then the bottom edge. You can see that's pretty much exactly equal. And then we see the price pull back to that price at the cash open and gave you the perfect opportunity to buy into this for what ultimately is going to be the measure. And that's how the trade has evolved. If you look at that from that perspective here, you'll see that that perspective there is what I was working on as far as the queues were concerned. And you can see that that gave me the target area for today's equity price. And you can see that that's almost exactly 100% right. Now, this wasn't just a hindsight opportunity, was it? Because we tweeted it at the time. We talked about it, actually, at the time as well. We talked about the queues at the time it happened. We talked about this bullish turn at 3 o'clock yesterday. 3 o'clock yesterday, not at the close. We talked about the bullish turn gives us something to trade into any bullish turn. 3 o'clock yesterday. Unbelievable, right? So 3 o'clock yesterday, bullish turn. We start seeing the opportunities. Then at 10:55 last night, SPX, as called this afternoon, lots of hedge volume allowed the bottom buyers to step in, as we discussed on the Q's large put trade. Bottom buyers, who'd have thunk it? So we now know what we're going to be doing. And, when we think about what this chart looks like, I've done whole classes on this one single chart, haven't we? Whole classes in this chart, and I keep saying to everybody, find me a buy trade. Find me buy trades. And what you guys did is you went through this chart and says, right, well, that's going to be a probable buy trade there. It's making a higher high. That's probably going to be a buy trade there. That's probably going to be a buy trade, and so on and so on. And you start working your way through these buy opportunities, and you all see them. You can all see them very easily. You saw them in real time yesterday as well. And you can see where all these buy opportunities were located on the spikes. These are all buys. Every one of these is a buy opportunity. And then you've got a chance to actually trade them. You've now got a chance to trade those buy opportunities. And when we then look at the S&P and ask, did these result in buy opportunities? What was the answer to that question? Did they all result in buy opportunities? Yes, they did. Every single last one of them ended up the perfect buy opportunity into those areas. So there we go. There's your buy opportunity there at the close. You know what's going to happen. Market's going to go up today because of the the market's going to go up today. It doesn't, not because of anything. It's just because there's so many hedgers available, which we called live in the room. So it's not just a hindsight situation, is it? It's not something that you can't see in real time with real data, real options data, because that's what I saw. I saw a big put option on the Qs, which brought up the subject. And because of yesterday's classroom, I thought, I'm going to spend a lot of time talking about this. Why? I was hoping that perhaps a lot of people would buy equities last night and this morning and try and be in it, perhaps to make themselves a few tens of thousands of dollars, perhaps $100,000 this morning if you've got a big enough account. And I was hoping that people would now take advantage of that obvious information and take advantage ultimately of what happened this morning. And what happened this morning, of course, is that the price traded, closed down on the gap a little bit, came back round and through, and off the cash open, and then ripped higher since then. 42.70s up to 43.15s. It's a $2,000 profit per contract. So if you're a 5-lot trader, it's a $10,000. If you're a 1-lot trader, it's $2,000. If you're a 10-lot trader, it's $20,000. If you're a 50-lot trader, it's a pretty good $100,000 winning day for anybody on 100. Making 100 grand in one day off a morning session is pretty solid stuff. And yet again, it's just the same bloody thing that we've shouted a billion times about, these spikes in the PC. Just the spikes in the PC, that's all we're interested in, isn't it? We call it, we've shown it, we've diced it, we've spliced it, we've done everything we can to get excitement about these types of trades so that you guys know that everybody's got enough profit to buy into. It doesn't mean the market's going to return to the previous peaks. It might return one single uptick and then drop straight back down again, but at least we're going to be in it to make that first big dose of cash. Massive amounts of cash when everybody else is panic selling, when everybody else is looking at it from a worrying point of view, and we are sitting buying from them because everybody's either fully hedged or everybody's taking cash, so they've got cash to buy up some cheap equities. And they took it down to get everybody worried at the start. And that's exactly what we're going to do every time. Take it down at the start, try and get everybody worried, try and get some sellers to come in, use up all the cash that we've just made on those beautiful puts that are now worth a whole lot of money. Use up all of those puts to just put into the cash market and just buy up discounts. And boom. And boom. Straight into enormous profits, as one would expect. Higher highs. I mean, you could even have discussed this one here if you wanted to add in this one, but it was still a little bit light, but certainly not going to be a sell trade with that spike. Certainly not going to be a sell trade into a big candle like that and on a downtick into a low. So you could have been arguing about this one here as well, but regardless, massive profits, isn't it? Massive profits. And again, we've covered it a billion times. So maybe next time, Maybe next time, if you didn't make a fortune on this one, maybe give it another 6 months so you can try again when we get another big spike. So good trade. Lovely. And what made it even better was, of course, the fact that we called it yesterday during class. That's what made it even better. Called it yesterday during class. A big put option on a downtick is always going to be a buy trade for me. And that's what we did. We called it in classroom. We got on board. We made the monies. Made the monies.